delayed streaming on YouTube today. So we had a lot of cool stuff to share with just our members only type of thing this morning. Now we're out on YouTube and just hanging out. There we go.
All right. Good morning, YouTube. We're in here. You can't see me.
on.
We're in here.
To kind of catch up people on the YouTube there. Now, I wouldn't recommend doing this on a 2-second delay, let alone the data delay on the option that I have up here, that 365 November 4th put on SPY. We're just doing this for observation purposes only, so don't just jump in this trade. I'm just walking people through it. And
still walking that line.
The reason we're even looking at this contract is we're looking at the percentage swing possible if SPY sets up a breakover for a bearish measured move today. And it's about a $1 move. And we would see this contract go from about 34 cents to probably close to 60 cents in a very short amount of time. And that's the kind of percentage shift we look for when we're day trading options. And they can be vicious, so you got to make sure that you know about what you want to risk in this situation, whereas you want to be able to cut your losses before they become significant. I have kind of a rule when I'm day trading options in my portfolio that I can take position size up to an outlay of like up to 30% of my portfolio value in a position like this if I'm comfortable with the move. And if that moves down, let me rephrase that. Hold on a second. Start over. I'll risk up to 10% of my portfolio value in this, and if this position moves down 30% in value, I've lost 3% of the risk in my portfolio on that. So I've maxed out my 3% rule of day trading or day trading liquidity in that position. If I take a 30% loss on an options chain, I don't want to take a 30% loss on that. If it starts to run against me, even a couple dollars, sometimes I'll just kick it out and reevaluate. So I'm not going to lose 30% on that position if I can help it. Sometimes SPY will make a vicious move out of nowhere, and you got to be real quick to take no more than that percentage. Just keep that in the back of your mind. It's just strategy here. So if I'm running these positions, I'll run these, sometimes I'll scale in 10 or 20 contracts at a time, and either I'll knock the whole position out once I do take a nice profit, or sometimes I'll keep a little bit of it on, depending on the percentage of the move. So if I get a 100%er, oftentimes I'll close half that position because the rest of that position is risk-free at that point, and it's paid for. And this is only going to work in a commission-free account, by the way. So then, if I continue to see momentum riding this thing down, I'm looking at the remaining half of my position running 10, 20, 30% higher. I'm going to compound that in. And if it just flattens out or time decay starts to eat it, I'm holding it for more than 10 minutes, I'll start having losses on that. I'll just close it and continue to keep that 100% return if I can. The idea behind that is it's just the position pays for itself when you sell half of it at 100% return. Pretty simple. So when we're looking at these options chains, we're kind of looking at the probability of a measured move here, and that's what we want to see. This is looking pretty damn choppy all of a sudden. So this position is probably not going to be worth trading yet unless we get a clean rejection off this 383 pivot area. This is a no-go. We're just looking at this for speculation to observe the situation. And currently my display here shows that option trading at 36 cents. Not even accurate. We're bid as 34, ask is 35, so it's off by a penny here. But let's see what happens if we do break over into that measured move mode. That's what we're looking for here. We're looking for education. And again, AFRM, I don't know if you're listening out there, but there's your rising channel, likely to retrace down here to about 1910 very, very quickly. So if you haven't taken profit on selling those cash-covered puts yet, you might consider that at that point just to roll them around. That thing has some range, to possibly get back to this bar here. And if that thing hits about 18.15 and you've sold $18 puts to open, that might be an issue. So you want to make sure you're staying ahead of that. The covered calls, however, for today, just because we've got this breakover and retracement doesn't mean it's going to be bearish all day, but looking at the long term, that is kind of continuation for a bearish trend here. So if you sold some covered calls around this time when it was running around 1938 to 1940, winner, winner, chicken dinner, because those are going to fade really fast. So just kind of keep an eye on that position if you're listening. All right, now we're getting somewhere. Got a little breakover bar here. That option hit 36 cents briefly there on the bid side. Let's keep watching. If we get that measured move, this thing will do some wonderful things. And personally, I'm trading this move on the ES rather than trading options. When I started learning how to trade SPY options like this, it kind of seamlessly blended into my ability to scalp the ES very effectively. And it's just a matter of being lizard quick with your lizard brain. Just see the chart, trade the chart, rinse, repeat. And you don't really have to factor in a whole lot more math or anything that slows down your process at all in that. Delta on options contracts for futures is fixed. It doesn't change. All you're looking for is price movement. So you don't have to worry about how long you hold the contract or any of that noise. As far as scalping stuff on a day trading basis, that is going to be very beneficial to you making that transition. But when you start to day trade options on SPY, you're really going to get a feel for trading price action. And when you start looking at the way these contracts move, you'll start to pick up some ability to generate some income in that portfolio of yours, just scalping options that you hold for like no more than 10 to 15 minutes. You're looking at like 3 to 5 days to expiration typically, and you're looking for that percentage swing. Right now, the bid on that contract is actually 37 cents here, so this is accurate. Meanwhile, price is threatening to break support here. It's wicked into it twice, though, so just keep an eye on this 1 minute chart. Also, I'm looking at a possible wheel trade on NKLA. The options chain is a little bit juicy at the moment for like 1 to 2 weeks out. You've got some pretty nice at the money premiums, and we're right in the middle of a range, so you can sell outside on that and make a few bucks, and really quickly reduce your your $340 cost basis if you bought right now down to next to nilch and even negative nilch. So doesn't take long in something like that. And when you're running, changeover, swinging short options on day trading style, you're making 40, 50 cents a day in premium on this thing, just rolling in and out of those short strikes. That adds up quick when your cost basis is only $3.40. You can have a very, very quick trip to zero cost basis on something like that. It's going to take about, you got to realize that you got to double this position. So it's at 340, you're looking at 680 for cost basis per 100 shares. You got to be able to buy 100 shares per put contract that you write and sell 100 shares that you have long at the cost basis per call that you write. And if you've read that wheel trade article that I wrote, it starts to really come together for you. Close my futures position here. There we go. I'm looking at a little morning star here, so it might bounce back up. Give me a quick scalp over one more time bearish. Currently, the bid price on that 365 put is holding 36 cents, kind of running in circles here. There's a lot of people bidding on it. So far, the volume today on that strike is 19,099 contracts traded. The open interest is only 30,523. That's a lot right there. That's a highly traded contract, and that percentage shift is why. Usually market makers would be selling to open these options, and they would be running their own kind of wheel trade on this, but they usually just sell them naked. They just scalp the swings on the short contracts and rinse repeat. They've got the capital to do it. Why not? I was going to try and dig up that article link and throw it in the comments there on the YouTube channel. Let's see if I can. Oops. Go back. Yeah, I gotta find that article on the other side. I know what to do. I'll link it in the chat and then I'll throw it back up. That works. Alright, so our share price is starting to go down a little bit more. That bid is back to 37 cents. Not accurate to what it's showing here. 38 cents and climbing. We're getting our breakover. Meantime, I'll dig up that link real quick here.
Coming down to 382. And if it hits that level again, we'll see what happens if it goes down below that, which is possible. We got 381.50 next.
Yeah. We've got that entire MTOP in play here. Let's look back.
Yeah.
15-minute chart shows it just nice. There is your peak 1, your critical support, peak 2, MTOP. Typically, these finish business all the way down to their support, which is down here on, what was that, Friday's open? About 378.50, 377.50, somewhere in there. I set a pivot line there. That is our ultimate target. If we break 382, we're likely to go there. Love me some M-tops, guys.
M-tops, but M-tops, M-tops. I like N patterns too.
Yes, N patterns are great too. But M is like money.
M is like money.
Or M
money
is
for
money.
The shorts.
That's right. Us bears get
I'm
paid.
I'm learning those M-tops too.
Us bears get paid on M-tops, man. Love it.
Paid M-tops.
All right, I'm going to spam that article one more time. First I got to open it.
Wheel trade article?
Yeah.
Yeah.
So Jeremy, just for a risk management, you would not open a trade in regards to an MTOP, given that FOMC information has not come out yet?
Well, I opened it yesterday. I day traded it yesterday, but today
Right,
I would like to see if we get enough sideways range where we could leg into a condor going into FOMC. But I would not trade any other strategy than a condor into FOMC because I want to make sure that my risk to reward is in a pretty neutral position with some profit between the two spreads. So essentially, you'd like to see if you can buy and in this case, I wouldn't just jump into the call side. It would have been ideal to get into a put side probably right around 10 after 10 here. Run into the put side debit spread and then maybe grab that call debit spread side on that touch to that 382 pivot that we're expecting here. And even though we're kind of moving in the right direction on that SPY option, it hasn't made that full dollar move yet, and the implied volatility fade from time we were looking to enter that thing till now, it's already off the charts. It's not really moving much. So your implied volatility fade as well as your time decay, even though you're in the right direction in that contract, it's not great. It's that 365 put. I mean, the bid is back down to 36 cents again, so it's really not gone anywhere. And this is why time on those options is so important, and you'd rather trade the breakover really quickly and capture that profit. Whew. I get talking sometimes, and it's like I got to catch my breath and say the next sentence. All right, I'm going to throw that link in the chat, and I'm going to copy it from the chat because I'm linking it with my phone here. And I want to put it on our YouTube channel because the wheel trade is going to be very important to a lot of people very soon. And if you're looking at learning it now is a good time to start learning how it works. And then when you can start practicing it, life will be good. There we go. Put that right in the YouTube chat there. Check that link out. You guys will love that. Okay, back to the day trading options side of thing here. Bid back to 37 cents. We haven't really moved much dollar-wise. If we do break that 382, this thing will run really quickly, but I'm not expecting much from this. So if I had bought that thing at 34 or 35 cents, I'd be just closing it right now. The time has destroyed that gain on that thing. Even at the money, you would have lost a much greater amount of time decay in that situation with Friday expiration. The profit margins, if you're comparing like at the money with this far out of the money, potato, percentage-wise. When you trade these out of the money options, you're looking for the really quick percentage shift, and that's all you're in it for. And that can be like literally 1 to 3 minutes sometimes, and that's where we got this nice control bar. Like I shorted the ES right on that wick and took advantage of this move here. That was over and done with on the 10-second chart real quick, like within the minute of this one candle. Now, running at options, day trading, you could probably hold it for about 3 to 4, maybe 5 minutes and make, a swing from like 34 to 37 cents. That'd be about the gist of that move here. That's over and done with. The bid is still at 37 cents, and we're almost on that 382 pivot. So this is kind of moot, but we're just doing this for observation more than anything.
Yeah, it's so slow right now because of everything coming later on.
Yeah.
SNOA is moving again.
Is it really? That thing is just a beast.
Well, it's given us some movement. It hasn't quite broken the high of 335 yet.
SONA?
Mm-hmm. SNOA.
Oh, SNOA. Okay.
Sorry, SNOA.
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 So SONA has like no volume.
Very wiki.
Wouldn't mess with it.
No, this has got some volume. One candle's got 568,000 so far. 1 minute candle.
Definitely has some volume. Looking at the daily chart, we've got probably a range to about 341, 342 maybe.
I have 339 is my top range right now.
Still
I had the 335 for the high. Yeah, go look left.
Okay, so our wave count was in the pre-market. We did a 1, 2, broke over, tested resistance on 1, accumulated into the open 1, 2. Yeah, I think 340, 342 is probably in range here off this little breakout. That's about it. Good
Yeah,
move,
it's
though.
not huge. Yeah, it's a good
though.
move. It was down at 307. It gave me a signal on a red hammer on a 1 minute right before that move. That signal was that told me it was getting ready to do something.
US DOE
Quick
EIA
question,
ethanol production
Stone. You've got
1040 mil
SNOA.
BBLS, plus
Where
8
did you
mil
get that from? Because I've
BBLS.
been watching the alerts in the penny stocks, and none of these have showed up. Neither has F Firm or the other one that you had up just now. So where do you have you got your own setups for the gaps?
So FRM
I
was kind of watching
Go ahead.
as a favor to Law. She was she's long in that position with a really high cost basis on it. I'm trying to help her walk through selling options on that. That's why that's up there. And then SNOA, yeah, we literally watch the volume movers, and when we see them in the pre-market, we start looking at them and just looking left, setting up all our levels, setting up all of our pivots, and planning our trades.
It popped up in a scanner for me that I have that you can't use in paper trading. But I have a scanner.
That's
I have
what
a
it is.
scanner. I have a scanner set for penny stocks that Scott made a long time ago, and he shared it with everybody in the group.
Nice.
Okay, great. I've been in a meeting all morning, so I'm going to concentrate on snow today. Then SNOA as my penny stock. Is that okay?
Yeah,
That's one to look at.
That's one. It may make its move though, and you have to catch it on when it comes back down and tries to move back up.
Okay,
Right.
will do. Thanks, Stone.
There's a couple that are popping up on my volumes. Or
Yeah, I
top.
had some moving earlier. I got a few popping up now, but they really don't have volume.
Let's see. There's a sub dollar that looks kind of interesting. Well, no, never mind. I was looking at AHG.
The edit EDIT is well, it's already hit its high. Never mind, it's way up there.
AHG.
It's a grinder though.
AHG is already done. Don't mess with it.
Huh.
Yeah, that one is spent. It made a 50% retracement of a downward trend with a wick. That's over.
Yeah. I also have an intraday volume scanner.
You might get one more leg out of it between like 70 cents and 70. I would say maybe 74, 75 cents. That's not worth it though because it's looking pretty bearish. Let's find something else to look at.
CANO, Cano, a Cano. We used to trade that one.
Yeah, that was a fun one, as I recall.
It's flagged up in the market, and it's consolidating now. It's probably gonna, I don't know, might drop. That's a exhaustion on the 1 minute at 950.
Here's one that might be swing tradable. FRZA, and I'll look at Cano in a minute.
FRZA.
Yeah.
Yeah, I've got that one. That's I think that's the one that Victoria was asking about.
FRZA.
Yeah, FRZA popped up in the pre-market, and they had some kind of news. It's got some kind of electric boat reservation. I guess they're making electric boats.
Ah, okay.
And they popped up in the pre-market, and that's a look I like, right? That was the look I like. It popped up in the pre-market, broke the pre-market high, came back down, went back up, but it looks like it's, I don't know. We'll see if it's done. It might be one that you can catch later on in the day. Oh, it's double bottoming right now.
It nailed a daily candle from
Hang on.
922.
It's double bottoming.
Is it?
I think so. Let me go look at it. Yeah, it could be. We'll see. And it's doing it right on a level I had that was a pre-market, a pivot at 234. If you go look at it,
it's got
sometimes, of course, it's 1034 now.
Yeah.
But sometimes when you see that little double bottom like that on a penny stock, usually in the middle part of the day, it'll pop back up. That's again that they're so predictable. You
Right.
know, it's like you got a 50-50 shot that it's going to pop back up. Well, you just wait to see if it breaches 243, which is a VWAP I have marked.
I've got like a couple of day pivots over at like 302 and 340. Just in a
I mean, yeah, it's already up,
set of control bars.
39%, but
yeah.
it's a penny stock, you know?
Yeah, we'll have to kind of look at that one for a minute, see if it holds the support level. Because we're inside a
Yeah.
range of a control bar and a pre-market here from 925.
Yep, that range right there.
Looking at
And-
about 229, 230 for support, so we'll mark that out.
And if you look at that 234 line, there's at 919 and 920 market time, pre-market, you'll see that there's two candles there. It's like it's a piercing pattern basically, or a tweezer bottom, what I would call an elephant foot maybe. There's two, solid green candle and a red one. That's where it's dancing on the top of their heads right now.
Yeah, okay.
So that's probably a good zone. So let's see what happens. Because I had another price mark at 231, so that 231 to 234.
Evening star on that SPY chart here. Let's see if we
I
can
see
start
that
cracking
on that
support.
sideways evening star.
Yes.
Both of them are dancing on I got MES, I got a 3840. Gosh, it's probably 25 is what it's supposed to be. Pivot, it's a VWAP.
See 3843.
Yeah, S NOAA, it's not doing anything at the moment. It was.
See if I can scalp some range on that. It's different. Like, yesterday was your day to stream. Today's my day to stream. I was scalping the living tar out of the ES yesterday. And then now that I'm
dude,
streaming, I'm
you
so
talk
distracted.
about
It's like,
feelings of missing out.
oh man.
Jeez, I missed that whole move yesterday
Yeah.
morning. That whole move because I couldn't trade and talk. I'm like,
It's almost frustrating, but at the same time, it's like
it's gratifying. It's all good.
I take it as an ability to go in and do your streaming and talking about stuff at the same time you're watching that. You have a record of it, and you can go and look back
Right.
at it. And it's like, okay, this is pretty cool because I can study this price action even though I didn't trade it.
Right.
And then the screenshot that I put up yesterday, I mean, I can't count how many times I traded that yesterday just in chop garbage. And
It's crazy. You are not normal. But you have to get us all to that point where we need morning calisthenics.
yes.
Get those fingers going, everybody. Come on.
And it's like, Sig wasn't the only guy worried about me. I shared that with a couple other, high frequency day traders, and they're like, "Dude, that takes some mental energy. You better take it easy and take some R&R from that. That's a hell of a day." I'm like, I felt calm, collective, comfortable, and didn't phase me. I didn't feel drained like I have been in other situations where like we've had a really hard, challenging, grueling day and we've walked through a lot of different trades and stuff. Comparatively, yesterday was cake. It came easy. Just every once in a while I get what I call a really good brain day, and I'll just be able to just be in the zone and just enjoying it and relaxing through the whole thing and just trade in, trade out, trade in, done. And it's just take it one at a time. I didn't really have to really put much thought into it. It was just a matter of I saw what the chart was telling me. I followed through with a trade plan and made money,
And it's very inspiring. I got to tell you that right now. The futures are the future.
Yes. And that's the thing. There's a big transition coming on here. A lot of day traders are like, that might be why we've had such a horrible time finding decent penny stocks to trade, is because a lot of the profitable day traders have like abandoned them and gone into futures.
Well, it's because they're volatile. I mean, and you got to be really careful about it. But the thing is, they move.
Yes.
And they give you opportunities, and I mean, you can blow up a small account easily.
Oh yeah,
You could
and quickly.
lose it quickly. I mean, how many people have I seen? At least I know of one guy who wrote that they lost $5,000 trading futures, and they were crying out in chat one day.
Yeah.
Just what am I doing wrong? What am I doing wrong? And I'm thinking, well, stop trading, paper traded for a while.
Yep.
And in my first futures account, I blew it up. I was like, oh my gosh, how the heck did that happen?
Yeah.
And so, but the other side of that coin is when you take your time and you practice those kicks, like you said, wax on, wax off.
Yep.
Scalping options, I see why you're not doing a whole lot of that. I
Yeah.
mean, it's like you don't have any frickin' decay.
Nope.
And you can get in on a position and if you want to go long and you got the technicals, then you can hold that position and you're going to make, you're going to take profit because you're not dealing with the frickin' decay. And if you could take the same position with one contract and take the same position on SPY with one contract, options contract, and you're going to lose money on an options contract, but you'll make money on the futures,
Right.
Because if it just sits there, if it just sits there, if you got your bad entry and it just sits there, it's like ugh.
Yep. Yeah. You're kind of stuck with options, but you look at the futures and you're like, wow, man, this is totally
It
different
is,
ballgame.
and that whole totally different ball game. Not today, now, unless you're really an expert, like Sig says, and you're sitting there scalping them, and you are. But for most days, just sitting there and waiting for the right setup, patiently, man.
Yeah.
Give me them futures.
Right.
Give me those futures. That's all Rose ever traded was futures.
Yep.
She didn't trade anything else. She made
Nope.
$1,000 a day trading futures.
It's doable. You can
It
definitely do it.
is.
And you can do a lot more. Heck, that Friday on Jackson Hole, dude. I made way more than that.
Well, you do. The Globex, like Josh says, the Globex sucks.
Yeah.
Okay, you got to get in there and I'll go watch it sometimes, and I'll put on last night. I watched it for a few minutes. I put on a 25 tick.
Yeah.
Because I got that from you, and I was like, oh yeah, a 25 tick out. Very clean bars, by the way.
Yeah, you can see the structure and you can actually trade it.
Yeah. But at the same time, it can be a mental game there, just sitting there watching it 25 tick forever until it makes your move. But you get up early in the morning.
Yeah.
And you get in there, 6 o'clock market time, 7 o'clock market time. Man, that you're in there, and it's doing stuff. And your volume bars on the ES on that Tradovate are accurate.
Oh yeah. You know exactly.
And it's
where
like,
they are.
oh, you know exactly where it's going to go. So that's what I like about the futures a lot. So.
They got that 3840 sticking out right now, as a matter of fact.
but the stop loss, I've seen you one time, you had almost $100 drawback.
Yeah.
It was $96, and I'm freaking out for you, and you're like, oh no, man, don't worry.
Yep, it's going.
And then it turned around, and I was like, holy cow, Jeremy.
Yeah, that kind of patience is crucial. And
so with you, if I were learning you as a guitar player, I would get out my Auto-Tune my AnyTune Pro, and it's my software that slows everything down. And it slows down the melody, it slows down everything, but it keeps it in key, so you don't have to change anything on your instrument. It keeps, and then I could plug right in and join right in that song, and not slow it down. That's what I would do with you. I would slow you down. I'm gonna get on YouTube. You can slow everything down, so I can slow you down on YouTube.
That's a cool
and
tool.
Steal your moves.
I'm gonna have to start. Might have to invest in one of those so I can go and learn some more songs. I love playing guitar.
Let me tell you, it's great. I showed up. I used to think all that stuff was, weren't supposed to do that. It was cheating,
Right.
And then I learned from an old guy one time. Well, he was one of my mentors. He was a legend. He said, yeah, son, when we were young, we'd take the record and we'd just slow it down and we just run it with our finger to learn that lick. I said, you did what? That's not cheating. He said, because I had no grid. He says, oh no, that's not. So I wound up in the 90s. They had a machine that you could get that would slow you down the song and keep it in the key, but it would like play it slow.
Right.
And I got one of those, and I showed up to rehearsal last year. We showed up to rehearsal. We had this complex thing we had to learn. It was a horn line, and we didn't have any horn players, so I show up, and I'm the least experienced of the group, and I'm the only one that had the damn line.
That's funny.
And they said, dude, we only had so long to do that. How'd you do that? I said, slowed it down. Learned it lick for lick, slowed it down, and then sped it up, played it as a play. Then it's kind of like stocks. I was basically trading one share.
Mm-hmm.
And then as I got that under my belt, then I raised it up to 3. I raised the speed up, and then I just gradually raised the speed up until I could play it at speed. And then you go a little bit past the speed that you play it at, so that you're fumbling and you're stumbling. But then when you come back down to the speed that you're supposed to play it at, you get it because you've stretched yourself a little bit ahead.
Right.
There, that's my tip. That's my tip for the day.
So that's kind of touches on many things there about trading, and I'm always saying those base hits add up. Those base hits add up, and you broke it down in a different way. You get it one string at a time if you slow it down, and think about that for a second. You build your working capital with these base hits one string at a time, and you just you pick it apart, you slow it down. And that's the whole point. Like, we look at penny stocks. We used to sit there for 20, 30 minutes sometimes waiting for a move. We knew the setup was there. It was just taking forever to come through, to complete. In the meantime, I'm over there scalping the 10-second chart. But, we're watching these penny stocks, and we're looking at the move, and we're like, that's the magic. We learn this on penny stocks. We learn this price action on penny stocks slowly and a little base hit at a time. 2, 3, 5 cent moves, whatever. We knew the setup was there. It was clean. Picked it apart. And I mean, you build your working capital on that. Now, then you go and you turn the speed up and start playing the song in real time. That's where I compare that 10-second chart on futures. We're looking at trading these patterns that take 20, 30 minutes to happen on a penny stock and playing them in seconds on a 10-second chart. That's where I get that efficiency from. I've seen those patterns on penny stocks enough times, both bullish and bearish, to know exactly what licks to play and what strings to grab and how to play that whole tune. And I think that's probably exactly the explanation that it needed. Just being able to slow it down and pick it apart one note at a time. Pretty cool. I love that.
Yeah. That's why I've always looked. That's how I looked at it. That's why I said, "Oh, I see why they say musicians do well at this," and because how we look at everything, and it's cyclical, and it's formulas, and it's patterns, and it's same over and over.
Well,
It's just like everything else you start to do, even like the baseball analogy I gave yesterday.
Right.
Somebody can teach you how to swing, but you're not going to swing like them if they're a major leaguer. You're not going to be able to do it exactly like them. You're going to have to put in the time to practice like they did, and then you can do it.
Got to choke up on the bat and go through the motions and learn it first, and then you can go and get enough practice of that. Go up at bat enough times and swing at enough balls and make a few base hits at a time, and then eventually you're cranking out homers out over the left field fence. So I wanted to kind of give the other side of this whole day trading, these out of the money options scenarios here, and look at the bid on this 365 put here. And this is why I choose that secret spot at delta where it's at like 0.06 to 0.08. Because if you're wrong and the price starts to move against you, the delta being that low means that the premium won't kill you in this trade if you are completely complacent, distracted, or even in some cases FOMO'd into holding on to this thing, it's not going to beat you up too bad. The bid on that thing's still 34 cents. And it hasn't really moved much. So if you were wrong and you couldn't take profit on this, or you didn't take profit on time, you got in at 34, 35 cents, you haven't lost anything, even though it's moving against you now. So that's the whole point I'm trying to make with being able to day trade these options on SPY that far out of the money, even with all the time decay and even with all the implied volatility fade in that low delta is going to be your friend when it moves against you. And when you are right, when you get the right timing on it and you get a really sweet breakover, that delta goes up to like 0.08, 0.1, that's when things really start to pay you. So that's where I like to see the benefit of taking advantage of a sweet spot as far as the risk to reward of that option goes. So like if you have that thing go against you, it's not going to kill you. If you're trading this same scenario at the money, you'd be really upset that you lost a ton of money in this little move right here. It would have just destroyed you. But that low delta didn't hurt you much at all, even if you were wrong. That's the whole point of trading those. That's why I trade in that sweet spot. Hopefully that gets a lot of people looking at this strategy, because it does make sense. And there's plenty of volume on that thing. My gosh, it's almost 20,000 contracts traded today. We're at 19,663 currently. So that says a lot right there. It's still got time. There's still a lot of people trading this. Yet the delta is so stinking low. You'd have to be literally trying to lose money if this thing was going to eat you. At that point, you'd have to be completely a bad FOMO trader. You would have to be like complacent or distracted or many other things to lose money on this thing, to lose significant money on this thing. All right, now we're starting to break over again. So let me see what the next strike looks like. We'd want to go a little closer to the money at this point. How about the 366 put? That's right at 42 cents right now. Delta's a little higher than I'd like on the upper range. It's at 0.076. But let's see if we get a breakover and that thing gives us some sweet percentage change. And the volume's much lower on that one, actually. It's only at 1,458 contracts traded so far. That 365 is actually a better sweet spot. Look for volume. If it's highly traded, there's a reason. See if we get a breakover and a good percentage swing out of that. In the meantime, this FRZA, it tapped just below that range bar. Let's throw an extension on this and see where that ended up tapping. About 272. Aha, it's a control candle right here. So we're looking for a break. 230 was the entry. 244, maybe 243 would be a better exit strategy, or 241.
243 is a previous VWAP.
Yeah. And that's about the range we're
I
looking
sent
at.
you a message. I got a call, and now that I'm back, when I get a call, I got to take a run. I'll be
Sure.
back.
Yeah, no problem, man.
I figured today was the day I would take a call since.
Gotcha. No problem. Yeah, I've got a couple calls to make pretty soon too, so not to worry.
We're sideways on the other stuff still. Well, we're moving a little bit there.
Oh, sorry, there's a comment in the chat I just picked up. Let's see here. For the wheel trade strategy, to confirm, you buy 100 shares, then sell an out of the money call and sell an out of the money put, correct? Yes, that's exactly it. Yeah, you are long the position for 100 shares per contract. You're willing to take on an additional 100 shares by selling the cash covered put, and you are generating premium on both legs of that, both the call and the put. The share price appreciation doesn't really matter at this point. If you're looking at something to wheel trade, you're looking for flat, slightly bullish. Even if it remains slightly bearish, if your reversal didn't quite work out, you can still at least keep pace just ahead of the share price depreciation, generating the income on these things if they're managed at least fairly well. But the whole thing is based on generating income from the options. The share price is relevant, but it's not like the end of the world if it starts to run away from you. As far as being able to swing in and out of the short legs, it's going to depend on your account size. If you've got 25,000 plus in there, you don't have to care about day trading in the short side. No problem. If you do not have 25,000 in your account, you can still get away with day trading it once in a while. If you get some volatility swings like we had on AFRM yesterday, that would have been a great time to use up one of those day trades, getting in and out of the short legs. But if you're looking at just relative flatness, don't sweat it. Just overnight them. I mean, you're selling weeklies on this thing. Who cares? Just run them overnight. That time decay is going to eat up a bunch of that premium no matter what. As long as price stays relatively close to where your balance point is, you'll be fine. In fact, this AFRM, our member Law, she got in and sold some covered calls. Not yesterday, it was the day before, I think. She got about 32 cents for some $23 Friday expiration calls, and bottomed back yesterday at 10 cents a piece. Impressive. And that is a really nice chunk of change coming back on that. That's $20 a contract, if you think about it. And from what I understand, her position size is pretty large. And I can't tell exact numbers, but I know she's got enough to sell quite a few of them because there was a bit of volume in that took place right when she did. So anyway, just kind of looking at generating income on something like that, that's pretty cool. You get into being able to sell a bunch of covered calls on a long position. Let's say you've got a long-term investment portfolio and you're a buy and hold investor type. I know a lot of them, and typically they're thrilled with a 10% annual return in their portfolio. You take those same long positions and run the wheel trade strategy on them, you'd be laughing at 10%. You would be laughing at 10% daily in some cases because you can really generate some serious income with the wheel trade strategy once you know it. I know people I've introduced it to who are buy and hold investor types who have made literally 300% in a month on this strategy. In most cases, general people will make that kind of number around every 90 days running the wheel trade strategy. So it's going to vary on your ability to be present and trade that chart. So you're looking at the most passive people making really nice returns over 90 days, whereas the most aggressive people can make really nice returns over way less time. And you just saw, literally sold contracts at 32 cents and bottomed back at 10 cents overnight. That's pretty nice percentage return on that. And when you offset cost basis on that, on like a $3-4 stock, dude, you're going to kill it right down to a zero cost basis in very short time. If you guys look at the video history here, I did a demonstration. I wasn't able to put a lot of graphics up as one of my early videos, but if you look at it, I demonstrated what that looked like on a $1 stock. And inside of 6 weeks, I had that cost basis at zero. And then in the middle of the 6th week, I had that thing down below zero. And I eventually closed that position at the end of that week and netted all of that profit while the stock was slightly bearish. I stayed well below the curve. I made it a negative cost basis and took profit even though it was bearish. That's how quickly and efficiently this wheel trade strategy can work for you. So that's what's in store for this, and that's what we're going to start focusing on teaching, because we're looking at a market that's got to find a bottom eventually. I mean, you look at the SPY weekly chart, I'm expecting a second touch of that 200-week moving average here. Hopefully it sustains a little stability around, 358, 359, 360. Hopefully by the time price gets there, it's around that. I'd like to see that. I don't ever let the chart or let myself try to battle the chart. I just let the chart tell me what's up. The chart tells me what to do. So if I'm looking at a weekly chart and I'm expecting that kind of range, if things melt down in the market, whatever, I would expect it to touch that again. But if it does find an actual reversal and starts to slowly melt up beyond that 50% retracement from that previous downward trend, which we've already nailed, I can get with that. I can be a bull again. Not a problem. I can start looking at loading up on some beat down stocks and starting to wheel trade them. Pretty easy. You can generate tons of income on a stock that, used to trade at like $20, $30 a share and is now trading at $2 or $3 a share, but it's a good company. They've got good fundamentals. Not that I ever look at fundamentals. I just look at the chart. Chart tells you the fundamentals. But you look at these companies and they're not going to be delisted anytime soon. You got like, dare I say, AT&T and stuff like that. You can find some value in wheel trading those when they get beat down, and you just keep on selling options on them. Rinse, repeat, rinse, repeat. You make money. It's a great deal. I was looking at XLRE as a good example for a sector that I'm looking to get into. And looking at the beat downness on the daily chart, we got that rounding bottom coming out. Look at the weekly chart. It's done this kind of thing before. It has, just like SPY, it has its pullbacks. But in general, the whole thing is long-term bullish. Once I see that second touch on the weekly chart, maybe down to like 33.50-ish, somewhere in there, if I start to see some bullishness on that, I might start loading up the boat on this thing because it also pays a very handsome dividend. Let's look at this. Usually when I hover over that, it'll show me. There it is. 36 cents a share was the last dividend paid on that thing, quarterly. All right. Let's look a little further here. 31. This one was 27, even though the price was up. It flashed on the screen. There it is. This one back here, 43. Pretty handsome. Price was relative to that. But let's talk percentages now. 100 shares, that's $26 for 100 shares here, 29 there, 41, 42 here. Keep looking, there's plenty. All right, so you're getting the dividend on this thing, and this is what this strategy was originally intended for. It's called the triple income strategy for this reason. You're taking advantage of the dividend income as well as the options income on this. And you just run the wheels on it. You run the selling covered calls and cash covered puts, rinse, repeat. And you got to pay attention to the dividend because your cost basis sometimes, if you sell a covered call and someone finds it worthwhile that the premium they paid to buy that call from you, their cost basis is below what it would be for having 100 shares on dividend X day. They will assign you. So you got to be a little more stringent about making sure you're aware of when to expect the dividend to come out of that thing, so you can either flatten that position or in the best case scenario, sell out of the money enough to where it won't be worthwhile for someone to assign you on that and keep your position long. I did this back in the first drop back with the pandemic hit. I did it on individual real estate investment trust stocks and freaking killed it. I mean, I was looking at stocks that traded, around $10, $15, pretty much sideways for years and years and years, that were beat down to like $1 or $2 a share. I loaded up on those, started selling options on them, and just freaking killed it. And plus, still collected dividends. There was only a couple of them that stopped putting out dividends for a short time, but they came back in. So it wasn't a big deal. And the income I was making on options on those things were at zero costs in very short order and just continued to generate income on them. Why'd I dump them? Well, the market went bearish. I took profit on them when I needed to. Plenty of cash to do it again. So watch these sectors. You can find sectors where you can find dividend-paying stocks that are beat down and run that as a triple income strategy, and it becomes very passive at that point. You can do this while you're working a full-time job. I did. It worked out great. Just set your limit orders, sell your options, rinse, repeat. Keep collecting that dividend, keep collecting premium on those options, and just roll with it, baby. Let's see, how do you do a wheel trade strategy? If you are looking at the comment section, I posted a link to an article I wrote that explains every detail of that on the YouTube channel here. Just look at the comments, click on that link, read that article, study that article, practice this thing with a penny stock. In the article I mentioned that it's not ideal to do this on a penny stock. It's in fact a bit risky, but get the motions down so you can learn how to do it with a penny stock for sure. Practice, then put it into effect on a large cap. But just kind of know that that's how you do it. Read that article, you'll get it. No problem. Let's see here. And that's the thing. Most people have, if they are into option selling, they will have just a passive covered call position open on their blue chip stocks. And that's fine. There's nothing wrong with that. The wheel trade just sweetens the pot. But you've got to have cash in your account to cover doubling that position for every contract you sell. So just so you know, you got to be on top of that. If you're running this on something like Amazon was before when it was trading at $3,000, you're going to need a big chunk of change to swing that. But the premium on those options, good Lord. Those options on Amazon back when it was trading around $3,000, dude, you on a fairly large chunk of change. I mean, you're looking at a lot of money to hold that position. But you're looking at an income weekly of about $3,000 to $8,000 on that one position if just selling one covered call and one cash covered put a week on Amazon when it was trading in that range was producing those kind of numbers for income weekly. So I mean that's a no-brainer. If you got the capital, swing that. So looking at stuff that's beaten down now, you got like AMD, you've got Nvidia, you've got Microsoft that did a forward split. You're looking at Google did a forward split. Those blue chip stocks that you're looking at, when the market does finally find the bottom and you start to see that they're beaten down enough to where it's equitable to get in those positions and start wheel trading them, dude, you'll be probably trying to track me down someday and finding ways to thank me for that. But trust me, you will be very grateful that you discovered this strategy when it comes to that. Because when those start to ramp back up, options start to swing on them, man, you'll be just generating income on probably the best opportunities of entering into blue chip stocks that you would ever have in your lifetime. So that's why I'm going where I'm going with this. I'm going to start really getting adamant about teaching that wheel trade strategy, and people are going to really benefit from this. And the market could dynamically change if even 10% of the people who are holding bags of things that they bought and chased for the whole situation with short squeezes and stuff like that, if even 10% of those people knew how to wheel trade it, dude, they wouldn't care about the holding bags at a high price and sitting there with loss in their portfolio if they knew the wheel trade strategy. And if they knew the wheel trade strategy, also, it might have an effect. 10% of the bag holders in that situation running a wheel trade could have stabilized price a little bit more, could actually affect that. It could also keep the options liquidity up enough to where it would be lucrative for the market makers to get involved and stabilize that price some. Could have that kind of effect on that whole thing. I mean, the market is the people and the people is the market. You start adding things like that together where you get actually smart people running a wheel trade strategy on these equities that they got kind of sucked into, so to speak. Everybody remains happy. Everybody wins. You're able to play both sides, and all three of you are going to smile. So just kind of go with that. Look into that. Study that. I'm going to be beating it to death as much as I can on YouTube and in our membership here. So be ready. Things are going to really get great for that. As far as YouTube goes, I'm going to sign off for now. We'll see you guys tomorrow. Have a good afternoon and trade smart. And be sure to hit that like and subscribe and ring the bell. Get some notifications. We put stuff out every day and we put all kinds of other stuff out too. So there's strategies. We drop nuggets of truth and knowledge every day. We'll see you guys around.
I just dropped one in Discord.
Nice.